welcome to the Deep Dive. Today we're looking into something really significant on the global stage, the U.S.-China trade relationship.
Specifically, yeah, that whole trade war situation and how it seems to be pushing China to, well, rethink its economic strategy.
Exactly. And for you, the learner, our aim here is to pull out the key stuff, the essentials, without getting lost in, all the jargon and endless news cycles.
That's the plan. Because the headlines, they can be constant, right? Tariffs, talks, breakdowns. It's a lot.
It really is. But underneath all that noise, there are some pretty fundamental changes happening in how China views its economic path forward.
Global trade is complex, no doubt, but this particular dynamic, U.S.-China, it has layers upon layers. It's fascinating, really.
Right. So our mission, if you will, for this deep dive is to slice through that. We want to get a handle on the key events, the drivers on both sides.
And critically, how China is strategically adjusting, how it's pivoting because of this friction. Is the trade war a catalyst?
That's the core question. And to dig into this, we've been looking at academic work.
Yeah, including a paper from ESA. The title translates roughly to Analysis of the CCP's Economic and Trade Strategic Layout Under the U.S.-China Trade War. Gives a pretty detailed view from that perspective.
Okay, great. So let's start at the beginning then. Where did this trade war actually, ignite? What were the initial sparks?
Well, the tinder was there for a long time. Even before the big tariffs started flying, the U.S. had growing worries.
Oh.
Mainly the trade imbalance, the sheer size of it, and what Washington saw as unfair practices. Things like intellectual property theft, copying ideas, basically, and barriers for U.S. companies trying to get into the Chinese market. Those were big ones.
So trade was growing between them for decades.
Yeah.
But these issues were always sort of bubbling underneath.
Exactly. Ever since China started opening up back in the 70s, and especially after joining the WTO, the World Trade Organization, trade just exploded.
Right.
But yeah, these fundamental disagreements about fairness, imbalances, market access, they never really went away, just simmering.
And what pushed it from simmering to boiling over? What was the trigger?
I think the real shift came with the Trump administration in 2017. They brought a much more, let's say, assertive trade policy to the table.
And that led to the Section 301 investigation.
That was key. Launched in 2017. Section 301 is it's a U.S. trade law tool. It lets the government investigate and act if another country's trade practices are seen as unfair and damaging U.S. interests.
Okay. And the result of that investigation?
Based on that, in March 2018, the U.S. announced tariffs. About $60 billion worth of Chinese goods initially. It was a pretty direct move.
Aimed specifically at what? What were they trying to hit?
The stated reasons were those core complaints: IP theft, forcing U.S. companies to transfer technology to Chinese partners, and all sorts of market access barriers, things making it hard for American firms to compete fairly there.
And China's response wasn't passive, I assume?
Oh, definitely not. They hit back almost immediately with their own tariffs on U.S. goods.
Why was that immediate retaliation important? What did it signal?
It showed Beijing was ready to push back, basically, to protect its own economy and industries, even if it meant taking an economic hit itself. It really set the tone for this back-and-forth escalation.
Okay, so walk us through that escalation. How did it play out after those first tariffs?
Sure. It became a real tit-for-tat situation. By May 2019, the U.S. had slapped tariffs on another $200 billion of Chinese stuff.
Wow.
And China responded, tariffs on $60 billion of U.S. goods. Then, September 2019, the U.S. adds tariffs on another $112 billion.
That's China.
Countered with tariffs on $75 billion of U.S. imports. It was just this cycle, yeah. Each side trying to pressure the other. Caused a lot of disruption and a lot of uncertainty.
Sounds incredibly tense. Did they try to pull back from the brink at any point?
Well, eventually, yes. Both sides seemed to realize this constant escalation wasn't really sustainable. So in January 2020, they signed the Phase 1 trade deal.
Phase 1. What was actually in that deal? What were the main points?
China promised to buy a lot more U.S. stuff: agriculture, manufactured goods, energy, big purchase commitments. And they also made pledges on better IP protection. In return, the U.S. held off on some planned tariff hikes and rolled back a few existing ones.
Only some.
Exactly. Not all tariffs were removed. And in fact, the U.S. even extended some tariffs later in August 2020. So Phase 1 wasn't a complete resolution by any means.
So despite that deal, and even with a new U.S. administration later, the core conflict, it didn't just vanish.
Not really, no. Most of the tariffs put in place during that peak period are actually still there today under the Biden administration. The fundamental disagreements persist.
Why is that? Why the continued stalemate? Does the research give any clues?
Yeah, the paper we looked at points to something crucial. The U.S. and China just have different goals, fundamentally.
Different goals? How?
The U.S. has these quantifiable aims, like obviously reducing that big trade deficit, but also non-quantifiable ones tackling the unfair practices, the IP theft, the tech transfer stuff.
Yeah.
China, meanwhile, has its own economic and, frankly, political priorities, maintaining growth, the role of their state-owned companies. Making big concessions is just politically difficult. This difference in what each side really wants makes finding common ground very, very hard.
You mentioned the U.S. concerns about the trade imbalance go way back.
Yeah.
This wasn't just a 2017 phenomenon.
Oh, absolutely not. You can trace these worries back to the 1980s. They were a huge point during China's WTO accession talks in the mid-90s, too.
So what were the consistent complaints?
Things like China restricting imports, the IP theft we mentioned, massive government subsidies helping Chinese firms, limits on foreign investment. It's a long list.
And the scale of this imbalance now, can you give us a sense of the numbers?
It's pretty massive. Last year, 2024, the total U.S. goods and services trade deficit hit a record almost $950 billion. That's a 12% jump from the year before.
Wow. And with China specifically?
The U.S. goods trade deficit with China was $382.9 billion last year. That's the second highest ever recorded.
So even with tariffs?
Right. Now, interestingly, total goods trade volume between them actually hit a record $690.6 billion. U.S. exports to China were at a record high, too, $153.8 billion. And imports from China were near record levels at $536.8 billion.
So huge amounts of trade flowing both ways, but that imbalance remains a major sticking point for the U.S.
Absolutely. And it's not just the dollar figure. The U.S. is also deeply concerned about China's industrial policies.
Like the Made in China 2025 plan.
Exactly. The push to dominate high-tech sectors, AI, semiconductors, robotics. The U.S. sees the huge state support for these industries as creating an uneven playing field globally.
And market access is still an issue, too.
Still a big one. Things like requirements for U.S. firms to partner with Chinese companies in joint ventures, and the pressure to hand over technology just to operate there.
You mentioned a Special 301 report from 2017 earlier. What did that do?
That report basically laid out the U.S. case. It detailed findings on widespread IP infringement, piracy, and other trade practices in China that the U.S. government viewed as unfair and harmful to American companies. It sort of set the justification for the tariffs that followed.
And the U.S. toolkit to address all this.
Yeah.
It wasn't just tariffs, was it?
No, tariffs were the most visible part, but there was more. Restricting certain Chinese tech firms from the U.S. market, tighter export controls on sensitive tech.
Things with potential military use.
Right. Plus, limits on some types of Chinese investment coming into the U.S. And you might remember at one point, they even labeled China a currency manipulator, although that label was later removed.
Okay, that gives a clear picture of the U.S. side, the history, the concerns, the actions. Let's pivot now to China. How has all this pressure actually affected their economic strategy? Maybe we should first quickly sketch out China's economic trajectory before the trade war really heated up.
Good idea. Because China's rise has been, well, astounding, hasn't it, since the reform started in '78. Just incredible growth.
Became the world's second biggest economy by 2010.
And the largest consumer market by 2021. It completely reshaped the global economy in just a few decades.
What was the core engine of that growth initially?
Initially, very much export-driven, becoming the world's factory, using its huge workforce and manufacturing base to produce goods for everyone else.
But that started shifting, right?
Yeah, over time, there's been a deliberate push more towards boosting domestic consumption as a growth engine and investing heavily in high-tech industries, trying to move up the value chain.
And their role in global trade today.
They're the world's largest goods trading nation now, absolutely central to how things move around the planet.
So what were some of their key trade tools and policies before the friction escalated?
They used quite a few levers. Export tax rebates were important, made their goods cheaper abroad. Import tariffs were used strategically, too, to shape domestic competition, maybe protect new industries. They also used trade remedies, anti-dumping, anti-subsidy measures against imports they saw as unfairly priced. Plus, lots of trade finance support, trade promotion efforts like big international fairs, signing free trade agreements, being active in the WTO. All aimed, at least officially, at promoting trade liberalization,
And investing overseas. What was their strategy there?
primarily focused on securing resources, energy, minerals needed for their own economy, also big investments in manufacturing and agriculture overseas.
Where were they putting their money?
Key spots included the US, Canada, Australia, parts of Europe like the UK and Germany, but also, critically, huge infrastructure investments across Asia, Africa, Latin America ports, railways, power grids, telecom networks, often linked to government initiative.
Like a Belt and Road Initiative.
Exactly. Belt and roads, setting up free trade zones. These are all part of expanding China's economic reach, creating new trade routes, deepening ties with dozens of countries.
And we were also seeing Chinese companies buying up tech firms abroad.
Yes, a noticeable trend of strategic acquisitions, especially in the US and Europe, aiming to get access to advanced technology and expertise.
Okay, so that's the backdrop.
Yeah.
Now, the trade war hits. How did those U.S. tariffs directly impact this established Chinese economic playbook?
Well, the most immediate hit was obvious. Exports to the U.S. became more expensive, potentially less competitive.
Right.
That instantly created pressure. China needed to find other markets fast to make up for any potential drop in U.S. sales. It really highlighted the vulnerability of being so reliant on exports.
So that export-led growth model suddenly seemed riskier.
Much riskier. It drove home the need for China to strengthen its own internal market, boost domestic consumption, encourage domestic investment. Making their own economy more robust became a much bigger priority, less dependent on shifting global demand or, geopolitical winds.
Did it also accelerate their push into technology and innovation?
Oh, massively. The trade war, especially the U.S. targeting things like their Made in China 2025 plan, really lit a fire under China's drive for industrial upgrading and self-reliance in key technologies.
Also, more R&D spending.
Definitely. A huge new emphasis on research and development, and also, interestingly, on strengthening their own internal intellectual property protection, trying to foster more homegrown innovation. The goal is clear. Lead in tech fields, depend less on foreign tech, especially American tech.
How did it affect China's investments going out of the country?
That shifted too. As we said, Chinese money flowing into the U.S. faced way more scrutiny, more hurdles.
So they became more cautious.
Likely more cautious, perhaps more transparent in their global investments generally, but it definitely added risk and uncertainty. And you saw parallel moves in the U.S. talk in Congress about monitoring U.S. investments into China more closely, worried about tech transfer the other way.
And how are Chinese companies changing their game plan in response to all this?
There's a clear pattern. Firms are actively trying to rely less on the U.S. market. They're looking for more cooperation, more investment opportunities elsewhere.
Like where?
Emerging economies, countries along the Belt and Road routes especially. It's about diversifying their global presence, spreading the risk, basically.
Makes sense.
And interestingly, it's not just about investment. We're seeing more Chinese firms targeting overseas consumers directly. Partly because domestic demand in China cooled off a bit after COVID, people started saving more.
So they're setting up shop abroad themselves.
Exactly. You see Chinese brands opening big flagship stores in places like New York or launching digital banks aimed at consumers in Singapore. They're using their strong domestic manufacturing base to offer competitive prices directly in these new markets.
So summing up the overall impact on China's strategy, it sounds like the trade war forced some major rethinking.
It really did. Look, it clearly brought uncertainty and economic risks, no doubt about that. But it also seems to have acted as this powerful catalyst for change.
Change in what ways?
A bigger push for industrial upgrades, for tech self-reliance, like we said, more focus on the domestic market, a more diversified global trade and investment strategy, strengthening ties with the global south via things like Belt and Road. It's a multi-pronged adaptation.
But it can't all be smooth sailing. What are the big challenges China faces navigating these changes?
Well, one is definitely its international image and relationships. The trade war strained things with the U.S. and others. So China needs to be more, maybe proactive in its diplomacy and communication.
And domestically?
Domestically, the research points to the ongoing need to really boost consumption effectively, make finance more accessible, spur genuine innovation, not just imitation, and crucially, develop the skilled workforce needed for this higher tech future. These are big internal challenges.
So it really underscores that this U.S.-China trade war is far more than just tariffs. It's this major global event that's fundamentally pushing China to reassess and redirect its long-term economic path.
Precisely. It's forcing a deep reevaluation, impacting everything from trade policy to tech development to foreign relations. A strategic adaptation is definitely underway.
This has been incredibly insightful, really getting into the nuances. So for you, the learner, the key takeaway here is that this trade friction isn't just surface level. It's acting as a significant force, compelling China to examine its whole economic model and make strategic shifts for the future. And that has ripples globally.
Absolutely. And thinking about those shifts,
Right.
it does make you wonder, doesn't it? What are the long-term consequences for global supply chains as China adapts? How will the balance of economic power shift further? Could we see new areas of intense competition or maybe even unexpected collaboration emerge down the road? Lots of open questions.
Definitely food for thought. We encourage you, the learner, to think about how these strategic realignments in China might connect with other global trends or even your own specific interests. Thanks for joining us for this deep dive.